Hi, everybody. This is Gary Dean, and this is our nightly video report for Thursday, November 10th, 2016. I'm getting this out about 10 minutes early. Again, I'm just kind of going in and out with all the medication and stuff. So I sent out an email saying that this was when the S&P had that, the big move going up there. And I said, when it started pulling back, I said, this isn't what you want to short. You want to wait for it to come back up, test these highs, or even break them, because what will happen, it will start giving us some bearish divergences. You can see the MACD had already crossed here, or let's just say our momentum. So I believe that any kind of move that comes up here, you can use it to short. And you can use just a low range for now, and just say 21.25 would be a target. But if you're getting short somewhere, if you kind of took this short, because this was a test of the high, and that's pretty much what I had said on it. I unfortunately was asleep when it happened, but in any case, you got short at 21.78. You're up 10 points or somewhere in that area. But if we're looking at just a target at 21.25, it's a 50-point move, and that's that's the type of trades that we want to get into. So the market's a little confusing right now. It is and it's not. And what's tough about it is you see the NASDAQ that's down 43 points, but then you turn around and you look at the Dow that's up 250 points, that's making new all-time highs. And what's happening is the investors are kind of rebalancing their portfolios based on Trump being our next president, because banks will start to do really well. They're very heavy into the Dow. You have health insurance that's most likely going to do pretty good from it. So there's a lot of things that are in the Dow right now that are going to be affected by Trump becoming president and some of the changes that he said was going to take place. So the Dow, and everything's kind of out of formation. You can't look at the Dow and say, okay, it's strong, so we need to get long. Because then you turn around and you look at the NASDAQ down 43 and say, all right, well, the NASDAQ's really weak. We need to get short. And then you have the S&P that's kind of stuck right in the middle. So I think that you just want to kind of, once you have some profits, take them and just wait to reset. I do believe from these levels that the bigger trade or the more points that are going to be made is going to be to the downside. So I want to use any strength in this area here to get short for the possible move down to the 21.25. Now, the one thing that I want to show you, hang on one sec. Okay, sorry. So the one thing that I think is really, really, you have to be cautious about buying, and why I believe that the bigger point move is going to be to the downside, is looking at the futures, the S&P futures. And this is the S&P, the cash markets never came down here. So often when we see this type of move where everything was done when the cash markets are closed, this should be a kind of a gravitational pull down to somewhere into the possibly the 2076. So from where the futures are right now, that's almost 100 points to the downside. So also, if you just take a look here, this move right here has some really, really serious sell signals and bearish divergences. I would like to see the cash markets have a similar type thing. That's why I was saying just to, go take a little dab if we come up and test this area here, and then wait for tomorrow. And if we get another pop up, you start building another one. But like I said, the bigger point move most likely from these levels here would be to the downside. So we have a little bit bearish divergences, nothing really major, but we have a MACD cross or momentum cross here. So it's running out of steam right here, and it's well deserved. I mean, we've gone up over 100 points in 2 days. So that's that. If we take a look at the daily chart, you can see this is where I'm saying that you don't want to get too complacent looking just short, because you can see momentum is moving up. We're at the midline. But what happened also was we basically just did a back test almost of the broken wedge, and this is still looking for a target to come someplace down between the 1956 and the 1890. So what I'm thinking is we come down, come back up, and test it again, which would be great. Obviously, I'm not really married to that because I don't know if they're going to be able to get higher than this. But in any case, once it fails, I do believe we're coming lower, and they may come down and test the moving average again. So there's a lot of points that are going to be, that I believe are going to be made to the downside, and really you just want to keep an open mind on everything. I'm not going to sit there and be a perma bear on everything, and I'm going to look, if I go long, I'm going to look to take profits because I don't think things are ready to explode to the upside. So if this gets into the overbought territory, heck, we're looking where we can have a really, really big move to the downside. But I still think building some type of short position, up in these levels would make the most sense. 15-minute chart, I got to adjust this here. Hang on 1 second. And if we take a look, what we're looking at, what you can see when we had this drop right here, it made it in between the 23 and the 38% retracement. So if the bulls, the bears can push it through, say the pivot as well as this moving average, which is at 2161, most likely we're going to get a reaction trade down to this 2132, 2121 area. And again, decent, that's a decent trade, and we could break it and go lower, but we want to just take, just look at where we can get 30, 40, 50 points on a trade, jump out, and if it continues down, then jump back in again. So right now, I like I said, I believe that we have bearish divergences that are huge. I believe the bigger point move is to the downside from here. Hopefully, you looked at the email that I sent out, and I said, I'm not against building a small short position right here if we come up and test the highs again, which we basically did. So, like I said, I would, if you're not short, I would wait until tomorrow, see what plays out. But I don't like the long side from here. I liked it when we were down here. I just missed the move because it a big part of it was done when the cash markets were closed. And then I really didn't feel like jumping in heading into the elections. So now that that's behind us, again, the dust is starting to settle. And what would make the most sense from what I'm seeing is a larger move to the downside. So that means that we want to start building some type of short position. So with that, have a great night, and I will talk to you guys tomorrow.